We want to take a few minutes here before the close. Today is Thursday, May 20, and just give an update on our view of the market. This morning we put in our note out that the market was positioned for this big rally, and that's because there was a lot of put options in the market. The VIX and volatility is quite high on Wednesday after kind of some weakness in that selling, and today we opened up with the market pretty flat. So you basically had one day, right, today into tomorrow, of a lot of put options expiring. We estimate that around 25 to 30% of total S&P Gamma expires tomorrow at the close, and so there's just a lot of decay. All those puts and the combination of implied volatility really crashing down. The VIX went from 24, 25 down to 20. So when you have all that happen, when you have that come off, you get that charm rally, which is the decay of those put options, and then you get the Vana rally, which is implied volatility dropping. So both of those hit put options quite hard. And what you can see on our chart here, this hero indicator, this is the real-time S&P options flow. This is the hedging flow, and it's green and it's very sharp higher up until about 11:30. There's something interesting about this 11:30, 12 o'clock hour. That's when Europe closes. So there was this big rally, we think, off of positive delta trades. That's put options getting closed and or call options being purchased. And that kind of crescendos at the time when the European market closes. Sorry about that, just bumped the screen there. So you can see that you have all this options flow build up into 11:30, and then we have a thing pause. Now, the other thing that's interesting is that we have this really big combo level. So this is the biggest positive gamma strike that we calculate with our SpotGamma system, and the market pauses right there, right? And this is when this options flow crescendos and stops. And then from there, this indicator trades flat. And now when it trades flat, this is a function of the market, of options flows not coming into the market, or they net out sort of neutral. And the market did have sort of a move down again. It checked down to 41.44, but really throughout the day kind of traded sideways, yes, and then we had this little breakout again into the close. Now, the S&P, big S&P options expire tomorrow morning at 9:30. With that, you have spiders, Qs, and equity options all expiring tomorrow at the 4 p.m. close. So what we're seeing now is from about 2:45 is that the put flow or negative delta flow is starting to come off. So this could be calls being sold and or puts being bought. Either way, now you can see the market is starting to consolidate some. What we think has really happened here is that we had this short cover rally. That's what this is, right? Puts getting, put hedges being unwound, put options being closed, and now we have kind of just this big, what we view as like a chasm now beneath this area. So we're going to look for next week, which is when options expiration is completely out of the picture. We're going to look for volatility to tick up into that expiration. If we're wrong, we think 4,200 is a major resistance line up ahead. But we wanted to show you this Vana model so you could see just how much flow was anticipated coming in as a result of volatility coming down and puts being closed. So this model here shows you the delta exposure of the S&P 500 options complex. So the bigger, more positive the delta is, the more short futures need to be sold to hedge out these moves, right? So if the market was to sell off today, dealers would have to sell a lot of futures, right, to hedge their options portfolio. But if the market was to rally, what you can see happens here is that the delta exposure, it was higher, there was a small sell, but when you take into account the fact that all these options had to expire for tomorrow, and so these are options that are very sensitive to time decay, they have to be closed quickly, you can see how that delta exposure drops down. So as the delta exposure decreases, dealers actually can buy futures back, right, because their delta exposure is less. So what happens then is the market keeps going higher, vol keeps going lower, put options are continuously bleeding out value, and then what you see happens is this big, short cover, dealer short cover, right? And we feel it's a very strong options-based rally because the market pauses right at this 41.73 line. So if this was, hey, the Fed changed some policy and there's just huge, natural buyers coming to the market, we don't think it would respect these options levels quite as well as it has. So if you kind of flip back to this, sorry about that. If you kind of flip back to this model here, you look at the gamma expiring for today, we're approaching this positive gamma territory, and this is the gamma expiration for Monday, right? based on what we knew this morning. So the positive gamma comes out of the market. That's another sign that volatility could pick up. And then if you look at the Q Vanna, it also had this very sharp picture, right? We've now rallied up to 330, which is a big area in the Qs. We rejected off of that level. That was a big open interest strike. We're now going to have gamma, 30% of Q gamma expires on Friday, so that's going to be loosened up and ready for some more volatility. And then you can see here as well, there's the positive gamma overhead is now going to be kind of wiped out, so the Qs are going to be ready to make a bunch of moves as well. If we check over to the NASDAQ market, you can see it just had a really big rally today. There was a couple of just major bullish trades here into the close. So you can see this is just giant bullish options trades that feed in with the market going higher. This is a tremendous move. If we scroll back a little bit, you can see that it has been a very positive, just consistent short cover rally really from the start of trading. The negative delta options that we've seen trade over the last several days gave way. It was all positive, put covers, call buying, right off of this big options level here in the futures in the pre-open, and now we've blasted through all the biggest gamma areas and gamma levels. So we're kind of in a no man's land from an options perspective in the NASDAQ, and again, most of this is going to be reset into the close tomorrow. So our current view is that this left something of an air pocket beneath, right? Because the picture is going to change so much into options expiration over the next day or two. The biggest moves higher usually take place kind of a dead cat bounce, bear rally type move. That's what we're thinking right now, and that the window for volatility really opens next week. So we're going to look for that to kind of pop higher, volatility to pop higher next week. And in the SPX, we would just point out that again the 4,200 line is major resistance. So if we're wrong and there's a rally, we think the rally is fairly capped. So it is a nice place to maybe take a short, take an opportunity to play a short over the next, say Friday into early next week. If that volatility doesn't manifest on Monday, Tuesday, then we think that window will probably be closed, and we're going to resume this kind of just grind higher that has held the market for the last several months. So that's our current view of markets. Hope this video was helpful. If you have any questions, leave it in the chat or send us an email at sg@spotgamma.com, and we'll get right back to you. Thanks.